Hey, it's Nate Bunty here, and I wanted to talk to the real estate investors in my audience about insurance for their single family up to 4 unit buildings. I've been in insurance for 20 years. I've worked with a lot of real estate investors over the year, and I've always felt that I was selling an insurance product that the carriers wanted me to sell, or I wanted to sell because I thought it was good. I was not able to provide real estate investors with the insurance they wanted to buy. They were asking for a particular program. I'm going to talk about it here in a second, and now we have it available from a high quality carrier, the stable market presence and great rates. So, real estate investors, I mean, generally hate insurance. Everybody kind of does, but I know this one problem has been the thorn in the side of a lot of real estate investors for as long as I've been in insurance, which is, I got licensed in 2002. So let's go and let's talk about it. Here's some of the problems that I've seen. I've seen with insurance for real estate investors. Your higher premiums eat into your cash flow. Everybody hates that. Cash flow is king, and you've got to protect your investment. But the way that insurance companies have sort of forced you to efficiently protect your investment and actually protect your investment has been with replacement cost coverage. Replacement costs come in way higher on, like city homes or homes that were built a long time ago than their market value. I use the example of a row home built in 1900 now sells for maybe $150,000, but the replacement cost is between $250 and $300, right? So you're insuring it for $100 to $150,000 more than what you paid for it. And like I said, this is the thing. People wanted to insure it for what they bought it for as long as I've been talking to real estate investors. Even the folks who are happy with buying replacement cost policies were a little ticked that they had to. You know what I mean? Like that there was no option and no flexibility. So that's one issue that we're about to solve here. I'm going to talk to you about this program. The second issue is a more modern issue. It's only really come into play lately, and that is that roofs that are 15 years or older are almost unacceptable at this point for homeowners and investment properties. So, these are issues. These are two issues. They're hot button issues that are, we're going to take care of for you. So, here's the solution is obviously me. Get the insurance that you want at a price that makes sense. And we're going to do an agreed value loss settlement on a dwelling fire policy with special perils coverage. It's a great policy with the type of coverage that insurance or that real estate investors have been asking for years. I bought it for $150,000. Can I insure it for $150,000? And up until now, unless you were going with actual cash value, which sucks. I'm just going to tell you right now, actual cash value claim settlement, if you actually had that, you are going to hate it when it comes down to claim time. But, I bought it for 150. I want to insure it for 150. Can I do that? No, you had to go replacement cost. Now we can do agreed value loss settlement, which could be as low as 50% of the replacement cost. So we still have to do a replacement cost estimator, and we still need to meet at least 50% of that. But in today's market, you're probably going to be 60 to 75% of replacement cost in this environment with that market value. So a total loss under this, if you say it's going to be $200,000, I bought it for $200,000, that's all I want to insure it for, agreed value, we'll do it. Burns to the ground, you get $200,000, and then that's that. What if your tenant is an idiot and starts a kitchen fire that costs $50,000 worth of damage that you need to replace that kitchen? Replacement cost loss settlement. So it's not actual cash value. And under actual cash value, if it was $50,000 to replace the kitchen and they depreciated, say 30%, you might only get, $30,000 or whatever, and or $35,000 less deductible. With this policy, it's going to be agreed value on a total loss and replacement cost on partial losses up to the amount of insurance. This is a great product. This is what the real estate investors that I've talked to over the last 20 years who buy single family houses and houses up to 4 units have been asking for. Now, the other thing that we're helping you out with in this program is the same carrier is good on roofs. The roof's got to be in good shape, but as long as it's in good shape up to 30 years old, we're good. No curling, no damage. It's got to photograph well, right? Maybe it's been power washed or something along those lines, because sometimes they get iffy when they're streaking and stuff like that. But as long as it's in good shape, we can do it up to 30 years. So, if either of these things have been a problem for you, contact me. I'm Nate Bunty. You're seeing this, and you're not 100% sure who I am. I have 20 years of insurance experience. I have never seen a program like this for rentals below 5 units. I have seen large schedules, hundreds and thousands of units, get agreed value coverage like this, because the premiums they're talking about are in the 6 and 7 figures. And the amount that they're insuring is hundreds of millions of dollars. So it was carriers making exceptions, writing manuscript forms and things like that, that were insuring these large schedules. But this is actually only available for 4 units and lower in a unit, in a location. If you have a bunch of houses, large, it's okay. We can do individual policies on all of those in this format. That's fine. Sometimes, even if you have a large schedule, there may be, you may have a bunch of different LLCs. That's fine too. And here's the thing too, this is not an excess and surplus lines carrier. This is an A++ carrier with stable market presence throughout the Midwest and parts of the South, that's new to the central Pennsylvania insurance market. No other agent has this product that's in Lancaster County. I think there might only be 2 or 3 agents in central Pennsylvania or in west, basically the Susquehanna, that are appointed with this carrier. They are based out in Michigan, and they've been slowly moving west from their Pittsburgh branch, or slowly moving east from their Pittsburgh branch. And now I'm pretty sure I'm the furthest east that they are. So if you'd like to talk a little bit more, if you have questions about this scenario for your investment portfolio, give me a call, 717-297-6657. I love working with investors, and I am really excited. I hope it comes through. I'm really excited that now I can provide an insurance program that real estate investors have been asking for 20 years. And again, the first insurance conversation that I had with a real estate investor, they wanted to insure the house for what they bought it for. Let's do it.